Hey everybody, welcome to the 1947 Operators Podcast. In order to increase the rate of technology innovation in India, we need to increase the number of operator angels in India. Hence, we are launching the 1947 Operators. 1947 Operators is a podcast that unpacks the investing journey of the best operator angels in India. We will be covering areas like what drove them into angel investing, what's their investing process like, how do they source deals, pick deals, and win deals, how do they evaluate founders and the market size, what value do they bring to the cap table. We're hoping the 1947 Operators podcast will help more operators start their angel investing journey. As a result, we will see an increase in the number of operator angels in the startup ecosystem. Awesome. I'm excited to have Nithin Kamath of 1947 Operators. Nithin is the founder of Zerodha. Nithin, welcome to the show.
Hey, thanks, sure. Thanks for having me on this.
We'll dive right into it. What got you into angel investing? What was your first investment?
Yeah, no, see, the thing is, around 2004, 5 is when I started business, in a sense. I used to trade the markets before that, but 2005 is when I quit my job and I set shop. And, very soon I kind of realized that, in today's world, if you're not a technologist, you need to be around one. It's almost like that X-Men movie, like where if you're not an X-Men, you need to be around, you need to be friends with one, So, right. So I started, when I started making a little money, some portion of it I started allocating, saying, what, I need to invest. The only objective was to be around good technologists, as in there was no other, I'm investing for a return. It was just to be around, good people, because I had no tech background and I knew that whatever I want to do in the future, there'll be technology involved in some way. So, I did small, like 1 lakh, 2 lakh rupee kind of, investments wherever I could. None of them worked out. I think I lost money on all of them, but I met a lot of good people. Around 2012 is when, a startup, they were just diagonally opposite to our office. That's where they were working from. And they dropped by to the office and they were trying to build a robo advisory kind of a platform for India. And it was kind of ahead of its time. Yeah. But me and them hit off, sensible. So Abid and Kailash, I met there. And me and Kailash really, kind of, liked each other and all of that. And Kailash joined us. I didn't invest in Sensible because, we went and spoke to the, exchanges back then, and we realized that, we'll not get approval for this. So we dropped the idea of Sensible, but Kailash joined us, and he became the CTO at Zerodha. So I think the biggest tipping point in my life has been him joining us, because without him, I can't imagine what Zerodha would be. So that was, like I said, there was no investment in terms of money, but the biggest return on investment in my life was that interaction and that dealing with that startup. But officially, we started investing in 2015 into startups. So what happened was, when we built our web and mobile app, it was called Kite. So what K and the tech team did was, we first built out this suite of APIs. We called it Kite Connect APIs. And it allowed for startups to kind of anyone to build a trading platform on top of that. Yeah. Like how neo banking, etc. is, right? As in bank gives out APIs today, and then you have these neo banks building on top of it. So we had those APIs back in 2015-16. We probably were one of the first in the world to actually put out APIs that allowed for startups to build on top of it. Now, when startup came to us and they came to us with an idea, we kind of realized that they also needed capital. Right. And this was a time when fintech wasn't hot, especially investment tech wasn't definitely hot. And so we started writing checks for between 2 to 5 crores into these startups, taking like a minority, like between 10 to 20% in the stake in the business. There, the first one was really small case, which we officially
A small
invested in.
company.
Yeah, yeah, small company. So, I mean, they had an idea, but they didn't know how to execute. And the other thing in the business of money is, credibility takes a lot of time to earn, right? As in, people don't trust you with their hard-earned savings and funds, very easily. Like, you won't trust a bank in 2 3 years. It takes a long time before you start trusting a bank. Same way with investing platforms. You will probably transact on a random platform if it's you're purchasing something, because in your mind you're thinking it's a transaction for shorter term. But as soon as you get on an investing platform, you're thinking about life savings, right? As in your horizons become like long term. And then you suddenly question, will the platform exist? Who are the founders? I mean, you never question in your head, if you're trying to buy, say, dog food on dogfood.in, right? You don't care about who's the founder, will this platform survive or not, right? As in, but as soon as investing, this is all about investing that comes through. And it took a long time for us, like took 2 3 years to get to our first 10,000 customers. But for every startup that we partnered, I think we were giving them 10,000 customer in a month's time, right?
Mhm.
Because what we did, which was more valuable, was more than the money or the APIs, was we showcase these products to our customers, saying that this is a partner of ours. We trust this product. Why don't you give it a shot and see how you like it or not?
Mhm.
Which is a big difference between how neobanks and banking partnership works today. Because a bank partners with neobank because with an expectation of bringing business to the main bank. So a bank will never give their customers to the neobank. But with us, we gave all our customers to all the startups we partnered. We call the initiative as Rainmatter, and the idea of Rainmatter was to expand the capital market ecosystem. It wasn't again done with an idea that I need to make return on investment and all of that. It was really that we were becoming a big fish in a small pond, and we said, Indian capital markets have to grow, and
Yeah.
if we can support startups, potentially, we can help the markets grow. And we didn't want to do everything ourselves. That's a call we took very early in life. We said this is our core competency, which is core broking and building education and etc. But whatever were adjacencies, we said no, we'll partner and collaborate and do it with others. And so that's really how Rainmatter started. And this whole startup investing, like which is sizable, right? As in, it isn't 1 2 3 lakh rupees anymore. It was, and by then the business was making money. So this wasn't like, there's not, we have not invested, we haven't ever taken anyone else's money. So all of this is really what is generated out of business. And if you speak to any of the startups that we've invested, we have never gone to them and asked them ROI in terms of, can you make me a return on my investment and give me an exit and all of that. I mean, for us, it's just been impact. And 2015, I would say, is officially when startup investing started. So,
Yeah, no, I think via Rainmatter, you're truly nurturing the fintech ecosystem, in India. And in fact, disclaimer here: I'm an investor in wealth, and no, my bad. Went wealth is the one. And
yeah.
Ajinkya, all he has is great things to talk about Rainmatter and you and the team. Nithin, when we are interacting with founders, initially just an idea and going after, a massive market. But, and we get to spend maybe few hours over calls or in person. How do you really evaluate the founders? Because it's mostly about the founders. Are there any specific questions that you ask and that kind of gives you, idea of that founder?
I think, like when I think about angel investors, see, the thing is, we have like my younger brother manages the public market portfolio, right? As in, so we do have a large exposure to listed companies, like a very large exposure. And there we are completely cold and brutal. There is no emotions in any of the investment, right? I mean, you're getting in with the idea to get out.
Yeah.
So all the investments there are done with an objective almost to exit. So it's the objective is not, I want to be in it to create impact and all of that, right? So now all the private investments, there are two things that we followed. One is its core competency, right? So when it is core competency, which is with stock markets, investing, trading, and savings and all of that. I mean, this is really what I've done for 20 years. So it doesn't take a long time to kind of figure if this guy is talking sense or not, right? I think that's very key when you're kind of angel investing. I think is kind of invest in stuff that you understand, right? Because it's you understand, you appreciate, you love, then because that whole investing experience also becomes fun and and rewarding as well, right? As in, I just randomly picking up companies which you don't understand and investing isn't. I mean, a professional can do it, a VC can do it, but I don't know if that is something angels should ideally be doing. So that's how we think about it. As in, when we are investing, we've invested, just based on what the founder is saying, and it's kind of a gut feel, right? As in, if you've done the same thing over and over again, like you're saying, you play tennis, you know how you're going to react. You can see an opponent in 2 minutes and figure out how good he is, right? As in, so stuff like that, works, and it doesn't happen overnight, but it takes a long time. But outside savings, investing, finance, I mean, we've invested in, I call it ecosystem checks. So like, we've invested in founders that I've known and knew that they're very skilled, and so second time founders, like we invested in Cred with Kunal, we invested with Jupiter with Jitain and all of that, right? So we kind of knew. I mean, I knew these guys, and when they said they're starting a business with this valuation, I was like, dude, how are you raising money at this much valuation? Without, I want to be in this party types, and so we put in some checks there, which have all performed phenomenally as well. I mean, last 4 or 5 years, you couldn't have gone wrong, right? As in India, angel investing. And the third thing that we're doing is, so we've decided to give back, whatever, most of the wealth that is generated from the business through the foundation. We're calling it Rainmatter Climate. So this is something that we're taking more seriously now, which is trying to support for-profits and not-for-profits working around climate change, creation of livelihood, etc. And this is outside core competency, right? As in, because when I meet startups who are kind of building around this climate tech startups as such, I mean, I have no clue why I should be investing. So what I'm doing there is I reach out to friends who have core competency in that space. I get them to interact with this, startup. And then I am doing it based on my friend's gut and not really based on my gut, So it's very tough. I don't even understand how people manage to pick up businesses to invest in which they don't understand. I mean, I think over time we'll figure this out. But through Rainmatter Climate, I think now we've done like, I think, almost 8 to 10 investments, again in that 2 to 10, 15 crore kind of range. And but it's still learning phase for me in that space. I mean, I still don't have a gut of sorts.
Nithin, maybe it could be a little hard, but let's say if you want to pick 2 to 3 traits in a founder that you just love, it just triggers you.
Yeah. So the thing is, I know the way I look at it, I don't know if everyone can look at it, right? I actually go into every investment saying this is a write-off, right? So for me, all the startup investments that we've done is for impact and not really with the ROI of sorts. But if I'm looking at a public stock and we're trading it, then we are completely, what are those 5-10 things that needs to, there needs to be a tick mark of sorts. Because it's about impact, you're essentially betting on the founder. So, if you easy chasing impact or easy chasing, valuation and quick bucks and all of that. I mean, we've done investments where the founders also have evolved over time. So the first time when we met, it was more impact, and then by the fourth round, it's the professional investors have changed the focus from impact to maybe trying to kind of do whatever it takes to get higher valuation. But at least I think when starting off, for me, the most important thing is interacting with the founder and seeing if he firstly has common sense and if he's not overselling, because folks who tend to oversell, it's hard to like suddenly if someone says, what, I am going after $100 billion opportunity, and the startup is still not it's a first pitch deck of the startup, and someone says, I'm building for $100 billion, or I'll change India and the world. It just it's just a like one of those warning signals of sorts. I mean, there's nothing wrong. I mean, you can be very ambitious in life, etc. But personally, for me, I kind of like people who undersell, understated, and I mean, of course, like I personally believe that you can't really put these large targets in your life, as in you have to do whatever you do well, and whatever outcome has to happen will happen if it has to happen. And this whole chasing outcomes is something that I personally don't like. So that I think our team also now has somehow been wired like that, and so we end up investing into people who are not just like overselling, etc. I mean, some So there are 2-3 check marks. One is the impact angle, saying how much can it help the country or the planet or whatever, right? Does it help people do better with their money, etc. Two is if the founders are good and common sense, etc. And three is their tech skills, right? I mean, in today's world, I mean, almost every product requires like a good technology team or a good CTO or a good co-founder who understands technology. So these three things are kind of paramount. So I don't think you can really outsource any product in today's world and build a good business. I mean, I think everyone has to build everything house of sorts. So which means the skill sets of the technology team is also very important sorts.
Yeah. And then you've been investing for some time now, and over the years, what's something that you know now you wish you had known earlier?
I mean, I mean, see, the thing is, one is if I'm going to look at outcomes, I think I should have invested more. So, because some of these outcomes have just been ridiculous. As in, like it is a proper bull market, right? As in, there is no two ways about it. I mean, I know there's a bubble. One of these years it'll pop, and all these notional valuation will disappear. But standing today where we are standing, and given the fact that we had more money to invest, I think we should have invested more.
Yeah.
Right? And that's one thing. Second thing is actually, there's. I mean, I don't think going back, I would have changed anything else. Apart from investing more money.
Investing more.
Yeah.
It seems like you were seeing good deals, and that of course comes from the brand. And then, what are your biggest wins, and also what are your biggest misses, and what did you learn from those misses?
Yeah, I mean, see, misses almost every crypto exchange in this country, came to us for investment, and so
that's what $3 or $4 billion in combined value.
Yeah, no, but right, the stance for me right from the start was, we are a regulated business, and anything that's regulatorily gray, I won't be even 15 feet away from it types. So like even to the extent that even for a trial transaction in my personal account or any of the core team members' account, we have not bought a crypto in those accounts. We said, now let's just stay as far away as possible. But financially, I think those investments would have done really well, because these were all like seed round and very early in these businesses, and some of them were even offering me stakes without any investment. Like they said, advisory stake and all that bullshit. So but I think that original idea of staying away because it's regulatorily gray has been the right thing to do, right? Because otherwise, I don't know where I would have gotten pulled into, or because the way that it's trending, it doesn't seem like the pain is over, right? As in terms of regulatory conflict, So even today, even not just crypto, but even there are these what do you call this? Like spread betting platforms, like it's again very regulatorily dark gray almost, So some of these guys, or there are platforms which are building prediction kind of what do you call it?
Prediction markets or outcome
prediction outcome markets, or whatever they call it. Yeah. So so all of this, I mean, we've kind of stayed away. So which potentially would I mean, they were all very good ROI in terms of return on investment, but the right call of sorts. The good ones have, I think I'm really excited about small case.
Yeah.
I'm really excited about what we do with Sensible or with Streak and with LearnApp. I mean, these are very close to my heart because it's kind of solving for problems of traders and investors, and also actually Quico. Quico is helping people do income tax returns better for especially for traders. So I think yeah, these 4 5 because of the impact on the ecosystem, because small case today has all these advisors. Like small case is made for advisors to very easily kind of go and cater to customers, because I personally believe that in India, the longer term larger problem to solve is you need to create an advisory ecosystem, because most of us don't have access to most Indians haven't learned finance in school and college, so they need help figuring what to do with the money. And I believe, while education can play a small part, but I think people, when it comes to money, want to talk to someone,
Yeah.
right? They won't just like look at a push notification and decide, or so that is like a big like play in my head, and I think because small case is kind of going after that, and that's also very exciting for me of sorts.
Got it. No, and these business models are very sticky. These prediction markets or prediction opinion and all that. Just so fascinating. Like it could be, like a attention gatherer. And Nithin, we'll switch gears here.
Right.
How do you make tough decisions? Like, what's your framework?
Right. See, with investing, I go in my head as it's a write-off, right?
Yeah.
So I've already kind of made peace
Yeah.
with that.
You've already made your decision easier.
Yeah, so it doesn't, so I've never really been put in a really tough spot, especially when it comes to investing in startups. I mean, and that framework is I've blown up twice in my life. I used to trade the markets actively,
Yeah.
and I blew up twice. And my learning was to be, was that the right way to remain rational is if you know your max loss, right? And when you're rational, a lot of tough decisions otherwise doesn't seem as tough anymore. Right.
Mhm.
So with investing, there hasn't really been anything like a tough decision to take. As in, in my head, I also have a certain percentage of my net worth or the
Yeah.
business's net worth we will bet on startups.
Yeah.
And so it's not going to exceed that. As in, so if there is X rupees in the bank, I'm okay taking risk with this, because I understand that startups, like right now it's a bull market and it's the valuation is quite high, but it could all be zero in like 2 years, 3 years from now. So I kind of understand that. So it's important that you take risk only with money that you can afford to lose. So which is really, I think, the fundamental framework of sorts, and that learning has been from after trading the markets. And I think with angel investing, I've been seeing a lot of my friends as well becoming extremely aggressive, and I keep telling them, dude, you cannot look at the last 2 3 years and assume that the future is going to be like this.
Mhm.
It's not going to be this easy. Investing in a company which doesn't have like a product, or which is not sustainable, and somehow make money on this in the long run. So I think that's really the fundamental framework or sorts.
Got it. And the context could be outside of investing. What's something that you have recently changed your mind on, and why?
Mm, uh, so I think so. Like I not in terms of investing again, but
Yeah.
generally, I when we started Zerodha, for a long time, we thought we want to be only a platform, right? As in, we will offer the best tools and utilities. We'll offer education, and customers will come and do whatever they want, right? But it kind of you're kind of washing away all your responsibility by saying that, right? As in saying that I'm a platform. Whatever happens on the platform is a customer's choice.
Yeah.
That's how we were for a long period of time. And then as we got bigger and as we kind of started realizing that when people make mistakes on our platform, it kind of affects them, personally, professionally, etc. We kind of realized that, we cannot just take this whole high moral ground saying, whatever happens, happens. Like, I think large platforms have to take more responsibility for what happens to the users on the platform. And that has been like a big change in how we are thinking as Zerodha over the last 2 years, right? As in, so we are saying that if people are making, see, the thing is, in trading and investing, it's very tough to tell someone what are these 5 or 6 things to do in life to make money, right? But it's very easy to say what are these 5 or 6 things to avoid so you don't lose money, right? I mean, the idea is to avoid, idea is to find ways to make people do lesser mistakes, which automatically increases the odds of them making more money, right? As in, because it's everyone who comes and says, I have this strategy that makes money forever, and that's all bullshit, right? As in, there is nothing, there is no 5 things that you can do in life that will help you suddenly become rich. I mean, I know there are a lot of books written about how to do all of this, but like luck, right place, right time. I mean, all of these things are very important, but 4 or 5 things, very fundamental things not to do, is something that we are trying to now introduce within the platform in different. We call it as nudge the platform. It's just like a user experience layer on top of the trading app. The first nudge we had was around, like when someone's trying to buy a penny stock on our platform, we scare the shit out of the customer now, right? We say, because a lot of people, what we realize is a lot of our users who came to the market thought that a stock at 5 rupees is cheaper than a stock at 500 rupees, right? Because, while yes, 5 is less than 500, but how cheap or expensive a company is based on the fundamentals of the company, right? And not really based on the value of the company. A stock at 5 rupees could be 100 times more expensive than a stock at 500 rupees. I mean, right, which is not very intuitive for most users. And so we started nudging, and that like I hadn't thought of this for the first 8 or 9 years of the business. For the first 8 or 9 years of the business, I said we'll build a great app, great platform, and we'll let users do what they want. But we've now changed the direction on it completely. I mean, the idea is not to be paternalistic. Idea is not to say, I will tell you what to do. The idea is to kind of just be that nudge and give an option to hop over it. In the sense, the user can always override the nudge if they want. It's almost like, think of, I keep giving this example. Think of a guy who earns 50,000 rupees, goes on, say, Amazon, and tries to buy an iPhone for 2 lakh rupees. Today, if you don't have the money, Amazon will say, dude, or any other platform will say, why don't you borrow, right? You can get it at, say, 10,000 rupees EMI, right? But the platform is really doing wrong to the customer, to the user, right? Ideally, the platform should say, dude, if you're earning 50,000 rupees, you shouldn't be buying a 2 lakh rupee phone. What are you smoking, right? As in, so, so yeah, so it is, I mean, it's very tough for a company which has investors to do things like that, right? Because, at the end of the day, the company and their founding teams, the primary responsibility is towards their investors, right? As in, especially once you become a public limited company, etc., and you're chasing these quarterly targets all the time. It's really tough to ever prioritize what is right for the user and say, I'll do what is right for the user more than what is right for the business. It's very tough. Only people can do it at early stage, as a startup. And once startup starts getting scaled and investors come on board, different types of investors, it's very hard to be like that. And so we are in that whole privileged position of not having to answer investors, or where we are saying, which allows us to do something like this. And we are hoping that we can peer pressure a competition to eventually end up doing this, because if a leading player is doing this, competition can't really stay away from doing it. So if we have one player like us in every sector, we are pressuring others to change.
Yeah.
So I think it's a decent kind of outcome, kinds.
Yeah. And Nithin, look, you're highly successful. You're one of the best at what you do. You're a billionaire. And in fact, I tell people around me, I would call you Cristiano Ronaldo of Indian tech ecosystem. A good-looking guy, best at what he does, and got everything. Like when you're you've succeeded a lot of things. Like, what's something that you're so obsessed about right now? Like maybe the last month or last week or today? Like you just keep on thinking about.
No, I mean this nudge. What I said, the platform. I can't sleep, so because of that, so I keep taking notes, because the thing is that penny stock nudge that we launched, right?
Yeah.
We reduced our penny stock trading volumes as a percentage of our equity volumes reduced by 75%. Right? Because until then, I didn't believe that a nudge like this can really, actually create some impact. I mean,
Yeah.
because right, but the thing what we realize is, on a trading app or any other, on a mobile app, that when you are spending those 3 or 4 seconds placing an order, you have, the app has really undivided attention from you, right? As in, like, you're not thinking of anything else, right? And those 3 or 4 seconds is really, enough time to educate someone on right habits, so that's something that, I'm really thinking of. On the personal side, I've been trying hard to get to my body fat below 15%, and I allow my sweets and allow my, wines and etc. So, all the dieting, from Monday to Friday goes for a toss over the weekend. So personally, there are two chains, which is, for both my wives, I need to find something which is healthier. So we've been trying to support startups which are, kind of making healthier sweets, chocolates, especially.
Yeah, the whole truth.
Old truth, and there's actually another one called Ditch the Guilt. It's actually quite nice, the chocolates. Yeah. So like a 60 or 70 gram chocolate is like 180 calories. So I can, nibble on it for like a day and a half. So which is, I'm kind of set on that. Now, I've been chasing down saying, is there a healthier beer? I mean, someone in the US has apparently made this protein beer, and I've been wanting to go
Protein beer. Wow. All we need is protein wine now. And then game over.
Yeah. So yeah, so I mean, but it kind of, so yeah, so even plant-based meats,
Yeah.
lab-grown meat, so I mean, this is something, that's having a lot of
Health.
potential.
Health is you're obsessed about lately.
No, I mean, yeah, the idea is, again, I think Indians need easier options to stay healthier, right?
Yeah.
Because it's almost impossible. Like, like, for the thing is, if you don't have any option to stay healthy, if say you're in the airport in Bangalore today, what do you consume? As in, like,
Yeah.
if you want that healthy choice, as in, like, I mean, there used to be a salad bar, and there's no salad bar now as well. I mean, I'm like, dude, like, if you don't give any options to users, how will users make healthy options, right? So I think I mean, this is again, for impact, and like, we've been trying quite hard even within the business, trying to nudge people to think about health, because at the end of the day, whatever money you make in life, if you're not going to enjoy it, what's really the point, so, and you can't enjoy it if you're not healthy. So that because, generally it's been very, I've been very passionate about, like, health and fitness, from when I was young. I mean, I've had great problems controlling my, like, my sweet tooth and my, my, especially with my food, etc. But generally, in terms of health and fitness, I've been, so yeah, so today that's also taking quite a bit of my mind share, and especially with all the scientific developments that are happening of sorts.
And how do you like tennis?
Yeah, I mean, tennis is one sport I haven't played in my life. I don't know. I don't know. Never had the opportunity. I think from when I started, working, I haven't really had time to go pursue, like, this new, like, because tennis requires some effort, right? As in, you need to go find a court, and then you need a partner, and etc. So I've been playing basketball throughout my life. In the office we play soccer, football every Sunday and every Wednesday. My wife is a fitness freak, so I end up getting up quite early every day and working out. But yeah, my issue is really with food. I mean, like, I can diet Monday to Friday as long as work's happening. But Saturday morning, I get up, relaxed, and
You're
I'm
like
like,
craving it coming. So for tennis, all you need is a good coach, Nithin. I got you, my man. If I'm in Bangalore, I mean, of course, I'm going to be in Bangalore. I'll ping you.
yeah,
Uh,
sure.
and then, of course, we all know you because of Zero, the tech entrepreneur. What do your friends know you for? Who are you outside of work?
Yeah, no, I mean, see, the thing is, I was with some of my school friends last Sunday, and I really don't have a social life, and it's not like I'm missing it, so I kind
Yeah.
of stay
You're
away from.
enjoying what you're doing.
Yeah. So the friends I'm really close with and I spend time is, one is my school friends. There's a gang of friends, and we end up doing a holiday together every year. I worked in a call center for 3-4 years between 2001 and 2005. So there is one group of friends there, who are like friends for life types, and outside there's the core team of Zerodha. We're like 5-6 of us with our families, and we holiday at least 10-15 days a year.
Mm-hmm.
So outside this, I really have almost zero social life. So I stay away from all the. I am active on social media today because I kind of realized that I wasn't active till 2019, and because until then I spent a lot of my time trying to influence journalists of sorts. So I used to spend a lot of time interacting with journalists, and until I realized people have stopped reading newspapers and watching TV, and you have to build your own brand and etc. So I got on Twitter and LinkedIn and all of that. So yeah, it might seem on social media like I'm very social, but in reality I'm very not social. I go play basketball with these 18-19-year-old kids, and so it's stuff like that.
Yeah, and seems like work has become a life to you, and that's the life you enjoy the most.
No, I have a lot of hobbies. Like my
Yeah.
son plays the drums. I play a little bit of guitar. So like I try at least giving 20 minutes, 30 minutes a day for that. I allow magic, allow poker, allow. So we have a game in the office, where like a bunch of us sit and play poker. Yeah, I mean, my son's is 7 years old, and he's suddenly started making sense. So I can actually talk and converse with him. So
Did you trade yet?
no, I don't think I wouldn't want him to trade, because the issue with trading is like both Nikhil and I keep talking about it. It somehow it creates an illusion that making money is easy, and which it isn't. I mean, both of us have learned the very hard way of saying that the only easy thing about trading is opening a trading account. I mean, nothing else is easy. So I wouldn't want him to kind of trade early in life. I think it's important to go through your struggles and etc.
Yeah. No, love it, Nithin. Man, I had so much fun. Thank you so much for making the time to come on the podcast and really walk us through your investing journey, and the genesis of Rainmatter, and who are you outside of work, how you make difficult decision and all that stuff. It was a lot of fun.
Hey, thanks, sure. Thanks for having me on this.